You watching these spicy Bitcoin gains? Because they were behind your ear this entire time. Actually, Bitcoin did reach a new high this year, and by the time you're watching this video, with my luck, they'll all have disappeared. I'm sorry. Bitcoin is up close to 160% this year, and it's now over $40,000 a coin for the first time since good old 2021, back when Bitcoin reached over 68,000. But here's the thing. For Bitcoin to have the exact same purchasing power as it did during its peak in November 2021, it would have to be worth $76,145 today to be the equivalent of the Bitcoin back then, thanks to the disappearing value of the dollar, aka inflation. But the real question is, how high can Bitcoin actually go? Because just recently, Bitcoin also became the 9th most valuable asset in the world. Like gold at number 1, Apple, Microsoft, Saudi Aramco, Google, Amazon, silver, Nvidia, and Bitcoin at number 9. Bitcoin is now more valuable than Berkshire Hathaway, Tesla, and Visa. But the truth is, it's not just happening to Bitcoin, it's happening to a lot of other assets too. And in today's video, I want to help explain exactly why it's happening and how high Bitcoin could potentially go in 2024. So let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well, come for the finance, and stay for that Bitcoin magic. Now, there's 3 main reasons why Bitcoin is going up in price. And the first reason is because of interest rates. And this is affecting more than Bitcoin, it's also having an effect on stonks and hurricanes dorados. And here's exactly how it works. Remember, the stock market is always forward-looking. It's always trying to predict the future. So the price of a stock today is not what it's worth today, it's what people think they'll be worth sometime in the future. Now, Bitcoin also works the exact same way. It's trying to predict something about macroeconomics or big picture things happening to the economy. And right now, Bitcoin thinks the economy is headed for the worst and that the Fed will have to come in and save the day by dropping interest rates. Now, the evidence of why Bitcoin thinks that is because of something called the Fed's Beige Book. So I can't make this up because it's straight out of Hunger Games, which, by the way, if you haven't seen the prequel, it's amazing, go and watch it. The Fed's Beige Book is where the 12 districts, aka the 12 regional banks, ask business leaders where they think the economy is headed. This report is not quantitative, it's more qualitative, which is a fancy way of saying it's not numbers-based, it's more opinion-based, but it's still extremely valuable to the Fed. Now, in their latest Beige Book report, banks are saying the economy is slowing down significantly and that it's going to get worse over the next 6 to 12 months. Now, how bad things will actually get and which assets will benefit is not something everyone agrees on, but some people say that right now the market is being overly optimistic.
There's a lot of almost enthusiasm in the markets when you look at equity prices, when you look at a lot of other places that, right, hey, the Fed's going to cut rates and that's going to be great news. But my understanding from how I read this is if the Fed cuts rates in the first half of the year, it's going to be because the economy's in big trouble. So maybe it's not something that's worth cheering.
Now, the expression you'll sometimes hear people in the media use is the Fed fell behind the curve. The curve they're talking about is this curve, which are interest rates, the cost for banks to borrow money from each other. Eventually, the Fed corrected and caught up to the curve, and that's when you might remember we broke a couple banks. But now the critique is that the Fed is making the same mistake, but in reverse. They're behind the curve on lowering interest rates, because if they hold the rates too high for too long, it could cause a hard landing or for the US to go into a deep recession. And that's where Bitcoin's prediction of what happens next comes in.
Any story you can come up with right now always ends up in more Fed rate cuts. It's quite amazing. If the economy really weakens, then the pressure will increase on the Fed to do something. And what can they do? More rate cuts and eventually go into QE.
So the market is predicting if the economy slows down, which is exactly what it's doing, the Fed's hand will be forced and they'll have to lower interest rates as many as 5 times next year. They'll be forced to start QE and the buying up of assets, aka printing money, which is beneficial for Bitcoin and any asset that has a fixed limited supply. Now, The Economist also says that even if the economy gets way stronger, they'll still have to lower interest rates, and that's because if they don't, it could cause a classic recession thanks to the business cycle, the rising cost of debt, and higher unemployment, which is what we're seeing now.
Even if the economy were to strengthen right now and bond yields would rise, it would threaten the nascent recovery in the housing market. It would potentially start the classic recession-style domino effect of companies not being able to service their debt at rising bond yields and rising interest rates, and the default cycle starting, layoffs starting, and that's actually the classic way of getting into a recession.
When you combine all those reasons with the fact that next year is also election year, and you have even more pressure for the Fed to lower interest rates to make sure the economy is doing well. Even though the Fed's job is to stay out of politics and stay completely neutral, people say that humans will always human and they'll always have a preference. All those reasons add up to the fact that the Fed will probably lower interest rates sooner than people think. And here is probably exactly when. It shows the Fed's next meeting, which will happen Wednesday, December 13th, that the market is predicting a 97.7% chance that the Fed will keep rates the exact same. But it's also predicting over a 50% chance that they'll lower the rates for the first time by 0.25% sometime in March 2024. As we get closer to March 2024, keep an eye on that chart because most likely the probability of them lowering rates will go up even more.
I think there's a risk of a hard landing if the Fed doesn't start cutting rates, pretty soon. So, I think the market expects sometime middle of next year. I think it's more likely probably as early as Q1.
Now, reason number 2 why Bitcoin's going up in price is because of something called the halving or halvening. In April of 2024, when the machines and AI take over, when the Cybertrucks will rule the land and ChatGPT replaces us, that's when Bitcoin will become more rare than gold. Which sounds crazy to say because how do you even compare the rarities? Like, what's more rare, a pot of greed?
Which allows me to draw 2 cards from my deck, Kaiba.
Or this beautiful Charizard Yu-Gi-Oh card, which shouldn't exist but does as a taxable write-off. Believe it or not, there is an actual mathematical way to compare the rarities, and here's how you do it. By using a formula called the stock to flow, we can take the amount of something in existence, aka the stock, and divide it by how much we can make, aka the flow. And the result is how many years it would take to recreate the current supply in existence. So for example, if I have 10 Charizard cards, but I can only make 1 per year, we could take the stock of 10 divided by the flow of 1 to get 10 years. That's how long it would take to recreate the current supply. But now let's compare the stock to flow of Bitcoin to gold using some real math. Bitcoin's current stock is 19.5 million coins. That's how many there are roughly in circulation today. Now the flow of Bitcoin is a little more complicated to figure out, but the number is 328,500. Source? Trust me, bro. Now the way I got that number is by taking the block rate of production, which is 144, since each block rewards us with 6.25 Bitcoin, multiplying the 2 out gives us 900 Bitcoins per day. Multiplied by 365 days in a year, that gives us 328,500 Bitcoins. That's how many get mined or created every single year. Now we can take the stock of 19.5 million in circulation, divide it by the flow of 328,500, and the result is 59.3. That's how many years it would take for us to recreate Bitcoin's current supply at today's rates of production. But now we can compare that number to gold and see which one is more rare. According to the USGS, the United States Geological Survey.gov, there's about 244,000 metric tons of gold, and we mine between 2,500 to 3,000 tons a year, which is our flow. So if we take 244,000 tons, which is our stock, divided by, let's say, the average flow between the two numbers, 2750, we get 88.7 years. That's how long it would take at today's rate of production of gold to recreate our current supply. Because that number is higher than Bitcoin's and it would take gold longer, that means gold today is more rare than Bitcoin. But after April 2024, all of that will change because now the formula becomes the same stock, 19.5 million, divided by not 328,500, but half of that. That's going to be the new flow of 164,250. And the new answer is going to be 118.7 years. That's how long at that point it would take to recreate Bitcoin's supply, making it significantly more rare than gold. And that's a big deal because remember, gold's supply isn't always fixed. Some years we discover more, sometimes less, but gold's supply or stock goes up over time, whereas Bitcoin's is fixed at 21 million.
So what we've seen historically is that the 12 to 16 months after a halving is the best performance of Bitcoin. So that's what everybody's thinking about.
And the third reason Bitcoin's price is going up is because the spot Bitcoin ETF, which will be announced between January 5th and January 10th. If it gets approved, it will be one of, if not the most historical things that will ever happen to Bitcoin, at which point, I don't know how fast the price will go up, but theoretically, it should go up over the long term. So now I guess the ultimate question is, how high will Bitcoin's price go this time around? And the longer I'm invested in Bitcoin, the more I feel like a crazy person who lives in Groundhog Day forever. People are having the exact same debates as they did way back in 2009 about how Bitcoin might be based on the greater fool theory, which says that you're a fool to buy Bitcoin to begin with, and the only way you can make a profit is by selling your Bitcoin to an even greater fool. I also see the exact same arguments that Bitcoin has no intrinsic value, especially when compared to gold, which can be used in manufacturing and as jewelry, whereas Bitcoin isn't even real.
There was a number you once said that if it hit, that you would think about buying it for your kids.
$5,000. Right?
5,000.
Right. But at 25, you were really saying this is way too. Now it's 42. You gotta eventually throw in the towel. What number where you'll say I believe in it? 100?
Well, I just think it's a very because it's such a abstract concept that it's like
but it's
a
not
non-existent thing. Even though I know it's a thing for some people. I think
but
a lot of people look at it and go, maybe. I know it's a very philosophical
but
situation.
That conversation happened just last week, and all it tells me is that when people can't come to some sort of an agreement, that it isn't fact. Intrinsic value isn't based on any factual information, it's just based on how we feel that makes whatever real. But I also see the same criticism back and forth about the same people calling Bitcoin a Ponzi scheme, a fraud, a scam. And it's coming from the exact same regulators and the exact same bankers.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance. If I was the government, I'd close it down.
And I think there's plenty of irony in some of the statements when you consider all the facts here, but I also have to respect Jamie Dimon's point of view because he didn't become the CEO of arguably the world's most powerful bank by accident. But I also learned that it's good to take the competition's opinion with a little bit of doubt. I don't listen so closely to the hotels talk about Airbnb, or the cab companies talk about Uber, or maybe the banks criticizing Bitcoin. But as we go through this, you'll see the same feelings of fear of missing out, and the cycle will keep repeating itself again and again. And I remember going through all of this myself back in 2014 when I bought into it, and then it crashed, and I said, I will never touch this Ponzi scheme again. And then I heard of Bitcoin once again, maybe a year and a half later when it was worth $1,000. And the first thing that I said was, hang on, how is this supposed Ponzi scheme still worth anything at all? If this thing's a scam, it should be worth $0. Not $10 or $100, certainly not $1,000, but $0. Sure, there have been bubbles in the past, but there would have to be a global conspiracy for something like Bitcoin to be this valuable and for this long. I came to that realization when Bitcoin reached $1,000. Other people did when it reached $100. I expect that some people will have that awakening moment when it hits $100,000. But what's interesting is that now that it's almost 15 years after its creation, and it's worth tens of thousands of dollars, it's becoming harder to ignore and even harder to come up with something original to criticize it with. So I stopped fighting it, and I asked myself, how high could this thing go? And the truth is, I have no idea. No one knows. I have my theories, but instead, I thought what was more important is to just make it a small part of my investment strategy. Because if the critics are right, then I'll lose a little bit of money. And if they're wrong, I could end up making quite a lot of money. And that seems like a pretty reasonable bet to make, so I took that bet, and I'm learning more and more. And so far, it's been working out pretty well to me.
An interesting statistic is if you dollar cost average every single day with $10 from January 1st until now, you're up 100%. So with all the boom, the bust, everything in between, a Bitcoin analyst, Dylan LeClaire, pointed out, you're up 100%. So just dollar cost averaging alone will give you a great return.
I hope you got some value out of this. Have a wonderful rest of your day. Smash the like button for the magic tricks and subscribe if you haven't already. Don't forget to grab your free stocks. Links are down below, and then go track them automatically with a spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes on Wednesday. See you soon. Bye-bye.